Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a stock analysis video on Take-Two Interactive stock, ticker symbol TTWO. Take-Two Interactive is obviously the parent company of Rockstar Games, 2K Games, Private Division, and Social Point. The biggest, cash cow and thing people are thinking about is obviously Grand Theft Auto 6, along with potential new Red Dead titles. 2K is obviously big too. If they have a new 2K NBA game, that could be huge. 2K has also come out with BioShock, Borderlands, LA Noire. Take-Two Interactive has a lot of amazing titles under its wing, and that's not even including all of the great Rockstar games. I think that this stock could be very big because I anticipate that GTA 6 is going to be amazing. I think that GTA 6 is going to exceed every expectation, just as every other Grand Theft Auto game has done. I still have yet to think of really a bad Grand Theft Auto or Red Dead Redemption game. And Take-Two, I think, is an amazing company that spends a lot of money into making really great projects, and I think that they have some of the best talent in the industry. I'm obviously not a financial advisor. This isn't financial advice, but I think that there could be a chance that the company's undervalued, and I think that this is a company that I would very much like to own. Now, the stock is up 11.08% year over year. Currently trades for $185.51. The market cap, the price to earnings ratio is not listed because the earnings have been negative and that they do not pay a dividend. The 52-week low of the stock is $135.24, and the 52-week high of the stock is $192.50. 32.58 billion. Before we get into the DCF analysis and the actual nitty-gritty of the valuation of Take-Two Interactive, I'd like to humbly ask that you guys subscribe to the channel, check out my other stock analysis videos. But without further ado, let's get into the DCF analysis and take a look at our model. Here's my weighted average cost of capital for Take-Two Interactive. It's 6.38%. As you can see, we got our cost of equity from the CAPM with the 10-year as the risk-free rate, an average market return of 7%, and the beta at 0.85. I also inputted all of the cost of debt information here, and as you can see, the debt to equity ratio has debt weighted only at 9.79% compared to the market cap of Take-Two of 90.21% of the total weight. And as you can see here, it shows as negative, right? But we actually have average revenue growth of 14.64%, and I can actually justify why these cash flows are negative. The cash flows are negative because they're putting so much money into future projects. Now, this is obviously a net negative and something I obviously steer clear of. I've talked about it before. I don't like touching stocks with negative free cash flow, and Take-Two Interactive, unfortunately, has that. But they have been growing the revenue pretty consistently. As you can see, the revenue growth has been 14.64%. The average free cash flow is also positive from this period, but barely. You also have average free cash flow growth in the absolute toilet at negative 40.15%. But if we were going to model this, let's say we wanted to model off of just the 2021 number, right? Let's see what we would actually get with that. Then the stock would be a buy. So if you think that they can meet their 2021 free cash flows without, investing into it, then I think that this could be a buy for you. I also think, though, that it is kind of a red flag that they have these negative free cash flows, but GTA 6 is going to just be, I think it's going to be an insane game, but that's essentially what you're banking on if you're investing in this company. So as you can see from previously, if we set this back to what it was, so if we set it to that 2021 free cash flow amount, then, wow, that's actually really negative. Oh, it took out our discount rate. Interesting. 6.38%. Then we have upside of 37.28% with this growth rate. So if they were going to grow at just 5%, it would not be a buy. 6%. Essentially, if you believe that they can meet that previous amount, so I'm modeling, if you guys are confused, I'm modeling off of this 2021 positive free cash flow, which was, again, in 2021. So I think that they can exceed this realistically if they're not putting money into bigger games that are going to make the cash flow even bigger and drive more growth. I think that this stock is probably a buy, but it's also difficult to value just because, again, you have that, you have those questions of, is the free cash flow going to improve? When's it going to improve? And also you have the big question of, is GTA 6 going to be a success? Are the 2K games going to be a success? There's a lot of questions here, right? So if you personally have a very strong conviction that you think GTA 6 is going to make a lot of money, you think the future of 2K is good, and you want to buy into this, I could totally see you justifying that. I think you should do more research into the company than what's in this video. But I definitely think that Take-Two is an interesting kind of buy. I think that there's a lot of growth here, and I might look at adding some of this to my own portfolio. However, you are taking on significant risk that the game's going to flop or something's going to happen or they're not going to have the right people because they're putting so much into each project that if one project doesn't do well, then, it's not good. But that's kind of baked into the stock, I think. And I think investors are kind of forgetting how long-term of a company this is because every game that, at least from the Rockstar arm, which is the most important one in my opinion because it's the biggest component of Take-Two Interactive, Rockstar Game Studios has always made some of the best games that have ever been made, and I don't think that there are a lot of other competitors that can even come close to what they're making now. I think that they're the last game studio that has consistently made amazing games and come up with new and refreshing ideas to make consumers really excited about their products. And I think that that's very important in gaming because you don't want a company that's just squeezing out every penny that they can get. I know Rockstar kind of did that with GTA 5 now with all of the, shark cards and things like that. But I think that they're going to make something really amazing that's worth putting the money into this. And I think that they have a very long-term approach that kind of goes with my investing philosophy. So they might not have, good quarters, but they're going to have good years. I really believe that. I think that the stock is probably slightly undervalued or close to fair value, but I also think that the expectations are very high for this company. I mean, I think it's totally reasonable to just look at this company and say, I don't actually want to own this, right? So I think that you have to make a personal decision on this stock. I think it's a difficult one to value if you're not in the know on gaming. I think if you're not a gamer, this is a stock you probably should not touch. And, I think that this is going to be a good long-term play, but I think that there's significant risk here, which I've kind of already said. It's also hard to value because of the negative free cash flow, but I think that I think that the future for the company fundamentally is bright, and ultimately I think that's the more important thing than the valuation is that the company is of high quality and has a long-term goal because none of their games are cash grabs, none of their games are poorly done. Consumers love Take-Two Interactive and specifically Rockstar Games. And 2K also has, a big cult following that really enjoys every game that comes out, even though it's very similar to the last year's game. I've never been a 2K fan, but I know that people that play 2K love it. So I think that you're getting a lot of good things with Take-Two Interactive. And I think, with their mobile game studio, you're also getting some exposure to the mobile game industry. I think that this stock is very solid. I think that their balance sheet's very solid. And I think that they're making the right moves. And I think that GTA 6 ultimately is going to be a success. I would rate this stock a buy personally, or not a strong buy. I think that there are definitely better stocks to be buying into. But I think this is a very interesting play that could yield really good long-term results. Let me know what you guys think in the comments section down below. I really appreciate everyone who's stuck around and subscribed to the channel. It really helps me out a lot. And thank you guys for watching. Bye.